We are live on YouTube, I think, as of right now. So we are back this week in crowdfunding. Thanksgiving week, an exciting week for us Americans. And Connor, how are you feeling?
I'm feeling great. So I'm going to be going to the Thanksgiving parade in New York tomorrow. So that's going
Oh
to be
yeah,
exciting. Take a lot of videos, send it to my mom. She's probably going to want to FaceTime me while I'm there. So I'll probably do that too. That way she gets to experience it a little bit. But yeah, I'm feeling great. I'm feeling thankful. How are you
good.
feeling?
I'm feeling thankful, grateful, all the above. Little New York tidbit: they're blowing up the floats tonight. If you want to go out and
Ooh,
watch them blow it up, I've done it before. I was like 6 years old, but
but you
they're
remember it.
doing
So
it.
it had to be a good experience.
Yeah, exactly. Maybe go out, see the floats, hit a bar or two, and that's a good night. Um, but I guess we got a pretty. I guess since it's Thanksgiving week, holiday, it's not a super fast week in crowdfunding, but we got three really good things to talk about. And our first thing is going to be from our friend Yvonne from Crowdfund Capital Advisors, well, C-Clear, a subsidiary of Crowdfund Capital Advisors. Yvonne responded to our tweet, our X. I don't know what we're calling that right now. We're going to say our tweet.
It's kind of
Um,
that purgatory space where you're
yeah,
not
we
sure if you
don't
call it
really know what
X
to
or
call
Twitter. Yeah.
it. Yeah, we don't know what to call it. But I'm going to share my screen, and hopefully you out there can see it, so I can show you everybody Yvonne's tweet. Connor, can you see it?
It's loading right now. But almost. See
All
three
right,
dots.
3 dots.
So give us the background. What's this?
All right, so
What's it
here's the
about?
background. As it loads, if it does not load for you, I apologize for our technical
Oh, I can
difficulties.
see it.
You can see it? Okay. And if you
Yep.
can't see it, it's on our Twitter. Yvonne responded to our This Week in Crowdfunding tweet. But he sent us a KKR report on private credit. He wanted us to talk about how allocation to both private equity and private credit can boost returns, all to be found in Reg CF investment crowdfunding. True. The way I look at this and look at this graph, I kind of go back to one of my favorite classes in college, which I'm not a huge school guy, but like having memorable classes. But I do remember this one class. I think it was international business, and I forget the name of the professor. I wish I remembered his name, but he was a good professor, and he talked about Harry Markowitz and basically the portfolio diversification theory. And basically, the portfolio diversification theory is the simplest way to explain it is if you have a fairly riskless asset and you have a risky asset, a very risky asset, right? They both have their own risk profiles individually, right? But if you make a portfolio of the riskless asset and the risk, very low risk asset and the higher risk asset, that portfolio together creates a lower overall risk than the low risk asset. So low risk asset, high risk asset, portfolio of those assets together, lower risk than the low risk asset. So think about that. Equity
So
crowdfunding is
it,
a very risky investment, right? So you can think about
right.
that as like using crowdfunding as a way to diversify your portfolio. Connor, how do you look at this?
I think that's very. I look at it as institutions will see this chart and will see equity crowdfunding as a way to allocate the private equity portion of their investment going forward in order to try and boost the average rate of return they get from the portfolio as a whole. And since it's only a portion of their portfolio, they aren't taking as much risk as someone who just puts 100% of their portfolio in these private equity crowdfunding. If they
Right.
invest in all these crowdfunding startups. So I think we were talking to Yvonne, and he was saying that he's trying to get more institutions to get into equity crowdfunding. When you see that portfolio distribution, it makes sense for institutions to want to test out the waters in equity crowdfunding, to start allocating more money in equity crowdfunding. And yeah, I think it's a smart idea. And once more and more data comes out about how good the returns are, I think we've heard it's around 20%, 22%, which is really,
Mm-hmm.
really good if you take all the data And a lot of these companies still haven't exited yet. They're on their way to exit. So soon after, let's just say the first cycle of real companies go through, which will probably, the first cycle will probably end within the next couple of years, then there will be a lot of data to back up and support the claim that, investing, let's say 25%, 15% of your total fund in equity crowdfunding startups is probably a very good play going forward.
Yeah, and I think if you look at the theory and the data of just the pure numbers of it, right? Like equity crowdfunding is not only just a great diversification tool for your portfolio, because for a portfolio, it's a portfolio, which means it has separate things, different things combined into one. You need to diversify if you want to have the best total return in your portfolio. Now, the perfect percentage into each asset, that's always up for debate. But I think you also can say, all right, crowdfunding can be a great diversification tool, but also there's now great companies raising. Not that there always wasn't, but the quality of the company continues to improve as the industry continues to evolve. And I think that the more and more that we're able to get people's capital into crowdfunding and into these startups and diversifying their portfolios, and they're seeing the returns, the more traction this industry is going to get. I mean, we have talked countless times about traction and how we need wins, and wins is what crowdfunding needs. Crowdfunding needs the wins, and they also need to increase the reputability through those wins. And I think looking at it this way and continuing to show more data and saying, oh, this is actually a great diversification tool. You can actually lower the risk of your portfolio, right? Just that theory right there. The Markovitz theory is like my favorite thing in finance because it makes no sense on the surface, right? Like it doesn't. But when you look at the numbers, it's true. So I think, again, through education, understanding the industry, and through wins, crowdfunding is only going to continue to get bigger.
And now I think we're talking about it from the investor perspective, but I think this leads us to a good segue into the second story, which is more from the company's perspective and the founder's perspective. And that is, Why would you want to raise around via equity crowdfunding when you can go to, let's say, a VC or take out a loan from a bank? Why raise around? And so the second story is about Kroo, which we talked about last week. Right. And, they have 70 million in investments and then $850 million in deposits. So there's no reason for them to need to raise capital through equity crowdfunding, but they did it anyways. And the CEO had a great, he said, the reason why they did it is because they wanted to allow customers and other retail investors to get involved and to join the journey, which I thought that's a really good point. And I think we're going to see a lot of this going forward, a lot more of this going forward in the future. And then he said, which I love, the long-term dream is for this company to be predominantly customer owned, which I was like, wow, that is a great dream. I love it. But then
look at it.
It goes back to what we were saying, where it's you would rather have 100 advocates than 1,000 customers, because those advocates will talk about your company nonstop. And so I think a lot of these companies are realizing equity crowdfunding is a great way to convert customers into investors and into advocates. And that is going to make the business grow, and it's going to make people more loyal to your brand, and it's going to be better for the company long term too.
I look at it a very similar way. I think what Kroo has done, number one, has been phenomenal. Both the stories we're going to talk about are out of the fintech sector. You already talked about that one, obviously, but they're also out of Europe, which is really cool. And I think specifically UK. But back to what I was going to say is, when you have a business, and especially a startup, there are different ways to raise capital. Some are easier than others, right? But none of them are really that easy. It's especially in this environment, it's not easy to raise capital, and especially from banks at this point right now because of the interest rates. Number one, it's not super attractive. Banks aren't giving out a ton of loans, right? It's been all in the news. Venture capitalists, you've seen from articles, have pulled back. Some haven't, some have. I think that's kind of mixed. But now you have crowdfunding, which not only allows you to raise capital, but allows you to bring in advocates. And I think what we've seen from crowdfunding right now is that people are seeing a level of success, or companies are seeing a level of success that I don't think they expect. I've heard a lot of stories of rounds that go over, rounds that sell out very quickly. Now, there's obviously different ways to look at that. You could say, wow, these are just great companies, or the industry's doing really well. I don't know which one it is, but there's equity crowdfunding has definitely been filling in a gap of helping these businesses get the funding they need.
Yeah, and I think when you look at it, there's a supply and demand, and the really, really good companies still only have so much supply. The demand shoots through the roof. So naturally, when I see a company raising more capital than they have supply for, based on the allocations for equity crowdfunding, I see that as that's a really good sign that, one, people love the company and that their customers love the company, and two, they want to be part of the company because they believe in the company, not just that they love it, but that they believe in it and they want to be along for the journey. And so seeing Kroo and seeing they hit $1 million in a few hours, right? I think we talked about it last week. So very impressive. And then
super successful. And it's also great to see crowdfunding do well outside of the United States. It seems like Europe's just been on fire.
Yeah. And that is a perfect segue into the third story.
Yeah.
Which is Prosper. Prosper is a fintech company, and they're attacking the foreign exchange industry by undercutting fees levied by wealth managers and offering high interest-bearing returns, which I've noticed, side note, that's been a very common trend, especially this year. I didn't really notice it last year, but high yield savings accounts.
Yeah, the 4-5%. Yeah,
that has been that's been a really big trend. At least I noticed it this year. I don't know if it was a thing last year as much, but the quote from the CEO is that he said, "It's time that the people who help you with your money are motivated to keep more in your pocket, not theirs." It's a pretty good quote. Prosper is based in UK, and they are raising on Crowdcube, which is a European crowdfunding platform. What do you think about the quote? What do you think about the idea? And then once again, talking about Europe and another story of a crowdfunding company in Europe.
I think it is always great to give consumers and businesses more options, right? And I think, with the stories we've talked about today, that's the theme, is you're giving more options to people of where to deploy their capital. You're giving more options to businesses of where to get capital. The more and more you allow the market to work itself and allow more opportunities, the more people are going to succeed. It's really just, that's just market theory, right? So
trust the market, baby. Trust the
market, right? Go capitalism, right? But no, I from Prosper to Kroo to just the incredible amount of companies that have seen success in crowdfunding. It is so good to see great businesses and great founders be able to succeed in a non-traditional way. And it's only going to continue to get bigger, because if it works for one company and it works for 4 companies and it works for 10 companies, it'll probably work for 40 companies, and it'll probably work for 100 companies, and on and on and on. And the more success stories and the more people that see success doing it, raising more investors that see success, the more traction this industry is going to get.
I'm really excited to see what happens after the first wave of crowdfunding companies that go public, after all those news articles come out, all the retail investors make money and they share their story. I'm really excited to see what happens to the industry going forward after that, because then it's kind of like the cat's out of the bag, right? A lot of people still don't know that much about equity crowdfunding, but when they start hearing these stories and when the mainstream media starts covering these stories, and these are nice success stories that the mainstream media is going to love to cover, that's really when this industry is going to get a lot more startups in it. It's going to get a lot more investors. And I think in a way it's going to be easier for the founders to raise capital if they take the right approach with the campaign. But I think it's also going to make the founders have to elevate their game, have to provide more information, which will be better for the investor.
And I also think it's the job of the people in the industry to educate people out there on not only what can be great about it. We've spent what now 15 minutes talking about how great crowdfunding can be, but the risks. I mean, there is a risk involved, but there is a way to take risks, and there is a process to doing due diligence. And I think that getting people the right educational material and the right ideas in front of them, and so that they can understand what they're doing, is a huge part of this. And I don't personally, and I think I've said this, I don't think it'll be widely incorporated by investors, the people that you need to make this industry grow bigger, until we get a level of education out there and awareness to where people can feel comfortable investing in these startups. And like the common person, not just somebody that is super into it and willing to research it, but it's that next level, right? The stock market, a huge part of the stock market is regular people investing their retirement funds, right?
Let me ask you a question. When you invested in Yayo Tequila, what was the process you went through?
So of the investments I made, right? So I invested in Yayo and I invested in Caddy. Now that was a while ago. I know a lot more now than I did then, and I would still make those two investments, and I think those companies are doing a great job. Let me just say that. The process I went through back then was, here are two products that I could see myself using. I like the Yayo tequila. It's delicious, right? So I like it. I could see other people liking it. And I believe in what the company is doing. I believe in how they're doing it, right? They're doing it the right way for Yayo tequila or Caddy. I think what they're doing is super innovative and useful. And, I think they have the right, I like the founders. I think they have a good vision and a good grasp on things. Now, today, I would probably look at a few more things, right? So I would look at probably more financial, I'd look deeper into their financial statements. I'd maybe do more research into the market they're going into, what comparable companies are, stuff like that. So yeah, that would be the difference for me.
I think the big question, like for me and a lot of other people who want to get into investing, haven't quite invested in a company yet, very soon, is how do you make sure you're not investing in a bozo, right?
Yeah.
So I like to think doing the podcast helps, because it's really hard to bullshit a 45-minute interview. Basically, right. It's really hard to bullshit that, and you can tell. You start to have that gut feeling if you hear some of their answers. You're like, but I think that really helps. But how did you go through the process of, I guess, making sure when you invested in Yayo and Caddy that they were doing it the right way? And what's your definition of right? Because I think a lot of people think it's the right way and realize that, well, they didn't go further enough in their due diligence to really make sure it was the right way.
I think the right way is a different answer for every person, right? Like, I think there is something to be said with investing within your values, like for what you believe the world should look like and what you believe is the right way of doing things. Now, when I say the right way, I mean like not spending recklessly, like not, spending money on things that wouldn't make sense. Like you almost think about it like, if you gave somebody money, would you trust them not to blow it on a new car? Like if you gave somebody $10,000, would you trust them to hold on to it, or would they gamble it away? Right. I think when you're giving a company money, you're entrusting them that the $1,000 you give them is going to be used to build the business. Now, whatever way they see fit, but it's going to end up positively impacting the business. You don't want to have that feeling of giving somebody a check and like literally seeing it go through a shredder because they go through it that quickly. I don't think there is a pure framework for that. I think that sometimes is feel and understanding the business and understanding what they do and looking at what they do spend money on and looking through their Form C and seeing, okay, like what do we usually spend? They usually spend money on. What are they using these funds for? And I think also when it comes down to it, and Kevin mentioned this too, I mean, you could reach out to these founders. I mean, they are raising money from you. It is their job to convince you that your money is worth being in their hands. And I think something that I would do now that Kevin mentioned in his interview would be to talk to the founders directly and be like, hey, tell me that 5-step process of what the top 5 things are that you guys are doing right now. What's the biggest obstacle for you guys? And really think about that question. Can they overcome that obstacle? Right? Like, what's the biggest positive momentum, shift you guys have had or are going to have? I think it's all about getting as much information into your head as you can, and then making the decision that feels right to you.
And I like what you said about, making sure you talk to the founder, because equity crowdfunding is one of the few investment mediums where you, the investor, have more power than the founder, because you get to choose if you want to invest or not. As an angel investor or as a VC, you have to allocate the money. Right? That's your job. But if you're a retail investor investing in equity crowdfunding, you get to choose whether or not you want to make the investment. And so if you're going to choose to make the investment, well, make sure you do all the steps. Make sure you talk to the founder. Make sure you ask questions. Make sure if you have any questions make sure you get those answers to the questions that need to be answered before making the investment, not just making an investment because you want to make an investment.
Yeah. I mean, be a little selfish, right? It's your money, right? Like the founders that are out there raising, right? They're obviously brilliant and have started great companies, right? But it's their job to convince you to give them your money, right? So treat it as you would think a venture capitalist would. Like, look at the company critically. Look at what you think might go wrong. Look at what you think might go right. And in your mind, make sure that you do what feels right to you. Yes. Okay? Because it is your money. But the upside and giving the money to the right people is so rewarding. And they will appreciate it. And hopefully down the road, you will see the returns and your wallet will appreciate it.
And how was the Yayo tequila?
Oh, it's delicious. I hope everyone goes out there. We got some new barrels coming out, new product lines. Ray Posada, which sold out last year. I think they're coming out with another couple barrels of that. I think John's doing a great job. We had him on, but like I've given it to multiple people. I don't know how many people, but everyone's like, yeah, this is real deal stuff. And it's like so good that you can drink it like without anything in it, like just ice. It's not like gonna like, if you have like crappy tequila and you're like, oh my God, I can smell this. Yeah, like it's really good. So shameless plug, if you can go find Yayo tequila, go get it. It's really, really good.
Well, I got one last question before we wrap it up, just because I think this is really interesting. You're investing in Yayo tequila. Clearly, you're an advocate. You love it. You think the product's amazing. Mm-hmm. So do you feel a sense of fulfillment already, just knowing that you are an investor in the company and you like the product that much?
Yeah. I think it's cool to see it on the shelves, right? And be like, oh, I invested in that. But I think what's most rewarding is, when you see the investor updates from John, or they send things out about, they'll send pictures from the distillery down in Jalisco, and, you'll see pictures of the staff and everybody having a good time, happy. And you hear about the innovative things John's doing. And, I think what's rewarding is that I invested in something that is not only, creating a great product, but it seems it's a company that is worth working for as well. And like that they have a lot of good people there. So I think that's what feels good, is to be an exceptionally small part of something great.
That's great. I love it.
Yeah. So I guess, will that do it for this week in crowdfunding?
I think that does it.
We have stories. So it's Thanksgiving. A couple housekeeping things. We went on a little rampage on Twitter today, but I want to just give everybody a couple bullet points. We started a Twitter community, X community. I'm never going to get over that. An X community we want to bring together Reg CF investors, share ideas, share news, discuss things. Again, the more information, the better. we started a X list of the top Reg CF voices. So guys like Kevin and
shout out Crowdskill.
Nice from Crowdfunding Capital Advisors, and Yvonne from CC Clear, Crowdfunding Capital Advisors as well. Crowdfund Intra, just people publishing Reg CF content. So also let us know if you want us to add anybody to that. We'd love for you to join that stuff, and just continue to keep supporting us. We appreciate it.
Yep. And have a great Thanksgiving.
Have a great Thanksgiving. I hope you have a great Thanksgiving, Connor.
Brendan, I know you're going to have a great Thanksgiving. Have some yayo too.
I'll have some yayo. I'm going to watch some football, eat some turkey. My dad makes a mean turkey, so I'm excited for that.
By the way, we're playing each other in fantasy.
We are. The protector of the realm, as my team is called for some reason, is on its way to the playoffs. Let's just say that. And you're one of the guys standing in my way. So let's hope that Alvin Kamara has a good week.
It looks like I'm on my way to Cancun. I'll be honest.
Oh, yeah, you might be on your way to Cancun. Well, there's a couple people in our league that are there already. So they'll meet you there. You have a good time. Drink some yayo.
Yeah. But with that being said, everyone, have a great Thanksgiving. Thank you for tuning in.
And so long.